Are you ready to make a winning offer on your dream home? Well, in this video, I'm going to give you the top 5 strategies that successful buyers use to ensure their offer stands out in any market. Whether you're a first-time home buyer or a seasoned pro, these tips will give you the edge you need. Stay tuned. My name is Feltis, and I get calls from people just like you all the time from all around the country looking to make a move to Southwest Florida, and I love helping all of you. So give me a call, shoot me a text, or send me an email, and let's talk about your real estate needs. Number 1 on the list would be to get pre-qualified for a mortgage if you are financing. If you're not financing, it's always good to have a bank account statement ready to go to show that you have proof of funds. The listing agent and the seller is always going to want to see that you're qualified to purchase the home, whether you're using financing or if you're just paying cash. Some of the main reasons that you're going to want to get a pre-qualification letter would include knowing how much that you can afford to pay and what your budget's going to be as a whole. So when you submit that offer, you know up front what your payments are going to be, roughly. I mean, the rates could change a little bit between now and when you are ready to purchase and they lock that loan in, but you'll know what your payments are roughly going to be at that point. The second part of that would be when you have a pre-qualification letter ready to go. As soon as we find a house that is the one that you want, then we have that letter ready to go to the listing agent and the seller so that they can see that you are qualified. So it makes it a lot easier for them to accept our offer when we first send it in, instead of waiting a couple of days to be able to submit an offer. You may end up losing the house to someone else that's already pre-qualified and they can write that offer quicker. This will also speed up the process of your mortgage because they've already got your information, and more than likely they've already asked for your pay stubs, bank statements, and any other questions that they may have. And then they just plug in the home, do the appraisal, and they're good to go. Send it to underwriting, and you can be clear to close a lot quicker, and you'll be able to have a lot less stress this way. And lastly, you'll understand that if there are any credit issues that you didn't know about, we can get those resolved quickly and move on to a home whenever you're ready. Number 2 on this list would be, of course, working with a realtor. We're going to give you the guidance that you need to walk you through this process. There's probably over 80 different things that a buyer's agent does on any transaction that helps you smooth the process that you may not even think about. And one of those things is we have ethical standards that we work by, and we are representing you, not the listing agent representing the seller, or in the case of a new construction home, the sales reps that work for the builders represent the builder. So when you write a contract with the builder directly without having representation from a real estate agent, then you end up not being represented by anyone. So the best way around that is to just make sure that when you go to see any new construction homes, take your agent with you, or have them call ahead so that they can put you on a list that you've already spoken to them and you're ready to go. Another reason is we are very knowledgeable with what the market is going at right now, and we can pull comps in the area and see what an actual home is selling for of what you're looking for, so that you can make sure that the offer that you're giving is the best price that you can get. A lot of these sellers are listing their homes higher than what the actual market value is. And you can see that when you look at the market reports, because right now the list price to sale price of a home is around 97 to 98% of what it's actually listed at. So if you don't know that and you see a home that you like and you just go ahead and write an offer at full value, then you're losing out on a potential 2 to 3% reduction in price, which could save you thousands of dollars right off the bat. Another reason to work with a buyer's agent is we have a very good professional network that we work with. And that includes insurance agents that we can get you quotes. So up front, you know how much your insurance is going to be, because of course, you know, in Florida, insurance rates are higher than they used to be. So it's always good to know what your insurance policy is going to run you before you even purchase the home. And a lot of times older homes have a higher premium because they do not have the same hurricane code standards that the new builds do. So it's good to know how much of a difference you're going to be looking at paying based on which house you're looking at. And we have different agents that we work with so that we can get you those quotes quickly and have peace of mind of what's going on before you even write the offer. Another one of those professional services that we are networked with would be your home inspectors. And the good thing about the home inspectors are when you write a contract, if it's an as-is contract in Florida, you can dictate how many days you have to get an inspection done. Typically it's 15 days, but a lot of times recently I've seen where listing agents will ask for 7 to 10 days instead, so that they don't have the home off the market in that long of a period of time, because with an as-is contract, you can back out of the contract for any particular reason. It doesn't have to be something wrong with the property or the home. If you just get cold feet, you can walk away from it and you don't risk losing your escrow deposit. And lastly, of course, we are very good at negotiating the best price and terms for your purchase. And if you, like I said before, if you don't know what the actual market value is of a home and you write a contract for what the purchase price is, you could be potentially losing thousands of dollars right off the bat. Number 3 in this list would be to narrow down what your wants and needs are for the home and a location. So the best way to do this is to initially figure out, if you are moving here for a job, know how far away you want to be able to commute. And the best thing I would recommend doing is drive the distances in the mornings and in the afternoons around rush hour, so that you know how long your commute's going to be. Because a lot of times if you see rush hour traffic in the morning, it could take you 2 to 3 times longer than it would if it was, say, a weekend day or later in the evening or during the middle of the day when there's not as much traffic out. Especially in season, because season you have a lot of the snowbirds that are going out to breakfast and they're just driving around and they're causing more traffic than you would normally get in the off season. So you just want to know how long your commute's going to be. So if you're planning on a 10 to 15 minute commute and you find out that it's going to be 45 minutes because of the timing of the day, then that may not be exactly the area that you want to look at. You also want to know how far away you are from schools if you have children, and restaurants, different things like that. So if you're planning on going out to eat a lot, then you need to know how far away it's going to take you to go to a restaurant that you like or something like that. And another reason that you would do this is because it will help eliminate or reduce the potential of buyer's remorse. Because a lot of times, if you think back to 3 years ago when people were just throwing money at homes, and then they get down here and they realize that it wasn't exactly what they wanted, or it's not in the right area, or it's even too small, or that just doesn't work out, you want to make sure that you do your due diligence up front and know the area, the home, neighborhood, amenities, all of that beforehand, so that you go into it knowing this is exactly what you're looking for and you don't have to have that buyer's remorse. So next on the list, we're going to be touring the areas and property. So once you get a list of the properties that you like the best, we will schedule showings for you, and then what I typically do is I will have you go out and look at 5 or 6 of them in the first day, and we will narrow down the ones that you do like and you don't like. And if you don't have any desire to move on with a certain home, then we toss that one and we narrow it down to the final 2. And maybe the next day we go look at those 2 and spend a little bit more time, dig a little deeper into each one of them, and then you know exactly whether or not this is the property for you. You also want to know what amenities are in the communities, if you want to be in a community or not. A lot of people do want to be in a community because they like the feeling of being close to people that are in the same type of profession or have kids or things like that. So you want to look at those different areas. But the best thing to do as far as those things are just to do your research and drive through the neighborhoods, see what kind of people you see walking around. If it's an active neighborhood, maybe you don't want to be in an active neighborhood because you like it nice and quiet. And there's other people that really like to go to the pool and hang out with a ton of different people. So there are different neighborhoods for every different situation. So that's my recommendation, is just to look around and make sure that what you're looking for is indeed what it is that you're buying. You also want to do this so that you can identify potential issues with the home. And this is before the inspection period starts, but there's a lot of things that you can see. You know, if you see wood rot on the soffits, or if there's big cracks in the side of the house, issues in the yard, issues with the driveway, anything like that, you see it up front and you know if it's going to cost a lot of money, then you should probably walk away from that. Or if you can negotiate a better deal to get into the home and then take care of it afterwards. And you also want to do this so that you ensure that the budget that you're looking for meets your needs. And what I mean by that is, if you go to a home that's not in a community, then you don't have the HOA fees or a CDD or anything like that. But if you go to a community that has a higher CDD or HOA, then you're looking at potentially up to $1,000 or more per quarter or per month even of HOA fees. I know that there are some communities around here that you're paying up to $1,500 a month for HOA fees, and that doesn't include golf. That's just for the social membership and pool, fitness center, and all the amenities that you get other than golf. So keep those in mind, because if you get pre-qualified for a home that's not in an HOA, and then you find one that you like that's in an HOA, and it's, say, even $500 or $600 a quarter, it may put you over your budget to where you can't afford that home. And lastly, we want you to review the property disclosures and the HOA docs. This is important because if you have, in some communities, they won't let you have a business van or pickup truck that has lettering on the side of it. So those are things that you need to be able to get into the garage. So if you have a, say, a 4-door truck with an extended bed or something like that that won't fit in the garage, but it has custom lettering on it, then you have no way of living in this property because you have to leave the truck outside and it's lettered. So things like this you need to either work around or figure out how you can get into the property. Also, there are different pet restrictions. So if you have a dog or a cat, cats usually won't matter because they're inside the home, but if you have dogs and say you have 2 or 3 dogs, some communities will allow you to have those, others won't. Sometimes there's breed restrictions, sometimes there's weight restrictions. So you just have to know whether or not the community is allowing what you have, and you're able to work within those guidelines. You also want to know what the financial obligations are with the HOA, and if there's a CDD that's included in your tax bill. And if you don't know what a CDD is, it's a Community Development District, and what that is it's a bond that the builders take out to develop the amenities and the road work and all of that. And then that is included in your monthly HOA fees. Let me correct that. It's combined into your tax bill every year, and it's usually over a 25 or 30 year period. So it's not like it's going to go away in a couple of years. So the CDD is important to know because your tax bill is going to go up because of that. And you also need to know if there's things that are in the future that they're looking at doing for the amenities, or if there's a reserve issue where they have to collect more money to make sure that they're a very solvent HOA, then you need to know if it's going to cost you more money down the road. And this is when you are able to look at those documents and figure out whether or not it's a good fit for you. This also gives you a chance to identify if there's any potential liens or debts with the HOA or the property itself. The title companies or attorneys that you're working with for closing will typically be able to tell you if there's any liens or debts against the property itself, but without reviewing those financial documents from the HOA, you don't know if they're looking at possible issues with a lawsuit or a lien or something like that due to issues that have happened. I do know one community in the area that has had the homeowners association is suing the developer because issues with stucco and the roofs are causing problems, and the developer is the one that built these communities, so they're the ones that should be liable to fix that. But of course you have to go through court to figure out who pays what and how much it's going to cost and all of that. This is also going to help you assess the health of the community. If the HOA is very low in reserves, doesn't have enough money for, if it's, say it's a condo community, if they don't have the reserves that's going to take to add a roof if anything happens like that, then you need to know that up front, because if they are short, they're going to give you a one-time assessment that's going to cost you, $1,000 or more just to be able to put a new roof on your building because they didn't have the excess reserves that were required at the time. And lastly, you want to know what the HOA is going to cover, because a lot of times if the HOA, I actually am in a situation right now where we're under contract with a attached villa, and we had to figure out whether or not the roof was covered by the HOA or not covered by the HOA, because that can be the difference between an HO3 and an HO6 as far as your coverage goes with insurance. And you also don't want to go into purchasing a property thinking that the roof, if anything happens to it, is going to be covered by the HOA, and then you find out when there's a hurricane that it's your responsibility to take care of the roof damage. So there are different things that you need to make sure of when you're looking through and reviewing all of these documentation, just to make sure that you're covered in the ways that you think you're covered. So I hope you found these tips helpful, and don't forget to hit the like and subscribe button below, and give me any feedback that you have, and tell me which one of these 5 different things you're going to be looking forward to using when you start your home search. My name is Kim Feltis. Please give me a call, send me a text, or shoot me an email, and let's talk about your real estate needs. Have a great day.